What is up, guys? Today is Wednesday, August 6th, and I took one trade today, and that trade was a winner, even though my model presented itself 3 times, I think, if I remember correctly. But let's dive into it. So, here on the 4-hour chart, the biggest thing that I saw was the fact that we did not invalidate this 4-hour FEG right here. So, that right there showed that we were trying to put in bullish structure. Because if this was truly bearish, then I would have at least expected this to have gotten invalidated and then would have been kind of weary with this one. But the fact that we held this yesterday and then started to move on up overnight, that started to point to it wanting to move on up to this high right here, as that was going to be the draw on liquidity for today. So on the hourly chart, same thing, right? We had the bearish fair value gap that was created here in the PM session yesterday. Then with the market opening up overnight, we had a push through that, creating bullish order flow. And then we also respected this bullish fair value gap right there, which showed that we wanted to head on higher. So at this point, I was extremely bullish all day. I had no reason to look for a short setup. And then here on the 15-minute time frame, same exact thing. We did invalidate this 15-minute fair value gap right here, but because we pushed back on up and created this high and failed to respect this bearish one, I mean, come on, at that point, it was so obvious that we needed to look for longs all day. There was really no reason not to. So looking for longs at every single macro, right? That was the name of the game today. So let's turn on the macro indicator so we can see the times. So here was the first trade that I actually saw, but I didn't take. And the reason why I didn't take it was because I usually like to wait for 10 o'clock. I like to see how price reacts to the 10 o'clock candle. And as you can see, we had a bearish fair value gap that was created during the macro, an invalidation of it. Good entry would have been the retracement back into it. And as you can see, if you would have gotten tapped in, a little bit of a consolidation here, and then quickly moves to a 1 to 1.5. If you guys have been watching my videos lately, you would know that I like to take 1 to 1.5s because that's what builds consistency. It is not a high RR trade, but it is a positive RR trade. It's over 1 to 1. So it is a good metric to go by. I don't ever advocate against it. So with this one, your draw would have been that 404.25, which was that previous high right here from Tuesday. Excuse me. So you would have had runners and they would have gotten stopped out. So here on this trade, same exact thinking once again. We had 2 bearish fair value gaps that were created. I don't know why the candles aren't loading for me here. There's 1 minute candle lit missing there. But overall, same exact thinking. We invalidated that 15-minute fair value gap. We did reject from here, but there was lack of displacement below the previous swing low. Okay, this is the more prominent swing low that was created. We didn't even come close to it. So the fact that we were moving back on up here, there was no reason for me to look for a short setup. And again, here we have the 1 minute fair value gaps that were created. You enter in right there, put your stop below the swing low, and you target a 1 to 2 if you wanted to, or at least some to that 303.50 if you wanted. You could have put your stops to break even there because that was less than a 1 to 1.5. This was the trade that I took, and on this trade I actually took it at a 1 to 1 because I've just been so busy. I don't really have time to watch it as much, so I set it, took it, and that was it for me today. That was more than enough because I come in with a much bigger risk in my trades, so it's more than enough for me. So then here at the New York lunch session, we know that 404.25 is our target. And as you can see, no bearish fair value gaps created inside of it, no setup. Coming into the New York PM session macro, I'm just repeating myself at this point, right? Here we have a bearish fair value gap, entry right there, target of 1 to 1.5. That got hit, runners got stopped out. If you wanted to hold the whole position up until here for a 1 to 2.5, very minimal drawdown. Pretty like half our risk, but still, it was a good setup. There was no reason, like I said, to look for any kind of shorts. Now I know a lot of traders like to short every single high that they see. Price hits previous day high, they want to short it. Well, guess what? Hit previous day high, didn't even want to do anything. So without proper context and narrative, you're gonna end up taking trades that don't make sense on a higher time frame. If you zoom out to the 15-minute time frame, is there any reason why you should short? Yes, I know it is going higher. And people are going to think, oh, well, why am I going to long so up here in premium? You don't know if that's premium yet because it hasn't retraced and started to create the swing high to come down into discount. So maybe right now, while price is developing here, like over here, is premium to you. but the price tag doesn't come all the way up until here, and what you thought was going to be premium ended up being discount. So that's why I continuously just trade whatever the market shows me. If it is showing a long setup, I'm taking longs. All right, so hopefully you guys ended up green today. Hope this made sense. If you guys have any questions, you know where to reach me on Instagram or TikTok, wherever you want to call message. Don't call me, but you can message me for sure, and I will catch you all later. Peace.